Hey everyone, this is Kirk here again at Option Alpha. So I wanted to record this video because I want to show people the difference between what we think about here at Option Alpha as the older way of trading, which is just picking and choosing strikes and expirations based on what we think or what our gut instinct is or what we used to trade before. Like I used to trade a lot of types of 30 delta, 30 days out or 45 days out. And the new way of trading, which we call options trading 2.0, which is this idea of using math and probabilities to really inform our decision making through more of a shopping for trade ideas experience to express what we want to do. Now, in this case, I want to make a trade in IWM. So IWM has had a huge run up. Today it's up big. It looks a little toppy to me. It looks like it's maybe hitting resistance. I know RSI and some indicators are up. Whatever the case is, it doesn't really matter like what the trade is. Just this idea that I want to express some sort of bearish position in IWM. And so I want to go find a trade in IWM. Now, what I would do originally, and this is historically what I would do, is I would go into a trade table on a broker platform and I would just simply go to an expiration that I wanted. So maybe say the 36-day contracts, those are monthly contracts, January 19th. And then I would select a trade. And sometimes what I would do is I would select, a delta, maybe 30 delta or 40 delta, just select a trade that I thought was a good looking trade. So in this case, if I went the 200, let's say I sold the 200 and I bought the 205 short call spread. So I'd be selling options, I'd be doing it out of the money, and I would sell the 200, buy the 205. Now, if I did this, and many broker platforms show this too, they show you some of the probabilities that you might have, like the probability of profit or probability of reaching a certain profit point or whatever the case is. And that's all good. And if you go and review the position, you can see that the max profit on the position is 184. It's moving around, and 315 is the max potential loss. Now, the problem here is that it really doesn't tell me if this is the best possible trade right now. This doesn't even tell me if it's actually a positive expected outcome trade. It just tells me some general numbers, which is great and better than telling me nothing. But it doesn't really tell me if this is the best trade of all the trades that are possible for IWM. Because if I wanted to trade some bearish exposure in IWM, is that the best possible trade that I could make right now? Or is there something else I'm not looking at? And without going through every single pair and combination of strikes and writing them down and comparing them, I have no idea of knowing what that is. So when I go over to trade ideas now, if I load up trade ideas and just to refresh, it has the most recent data, I can actually go in and I can include a particular symbol that I want to look at. Now, in this case, I could go here to IWM. I think I actually went past it. So let me go here to IWM, go to IWM, hit apply. Then I could say bearish. And right there, I get a list of all bearish positions in IWM ranked by alpha, which is what we went over in the last video. Now that's good. That gives me a good starting point. But in this case, the top trade right now that is showing is 190 days. Now this is where I can start to filter things out and say, okay, thank you for all of the trade ideas for IWM that are bearish, but I actually want to find a trade that is not 190 days. So let me go find some trade that's around the same time period. In fact, let's try to go find the exact same trade that we were looking at previously. So let's go to from 30 to 37 days, and let's look at bearish positions in IWM. And you can see that the bearish positions in IWM, broadly speaking, do have negative expected value. You can see that here with the negative expected values here and negative expected values and alphas here, which means that right now short call spreads are not pricing well for IWM. Now, if I go and actually find that same trade that we were looking at before, which is this trade right here, this is the 200, 205. This is literally the exact same trade that we were looking at before on Tasty Trade. You can see it's the trade that I think is still up here. Yep, it's the 200 to 205 short call spread for January 19th. If I go here to trade ideas, you can see I have the exact same trade up, the 200 to 205 for January 19th in IWM. Now the difference here is that when you use trade ideas and when you use Option Alpha, you actually get to see more of this information like the expected value on this trade, which is currently negative. So though this trade has a high probability of profit, which is usually what I would have looked for originally as a trader, like just high probability of profit, hope that the numbers kind of work out. Instead, what I can see now is that this trade is not a good trade. Even though it has a high probability of profit, the math just doesn't work on this short call spread for IWM. And so that's really powerful. That maybe keeps me from making this trade, and maybe I can find a different trade. So let's close out of that one here. Let's try to find a trade that actually has positive expected value. So we'll do EV more than $5. And you can see right now, the only trade right now that has a positive expected value is this trade, which is the 191-200 long call spread in IWM, or short call spread in IWM. The break-even point on this one, though, I don't like it as much, so maybe I won't make this trade. Maybe it helps inform me to make a different trade, and I'll show you how I do that here in a second. It's not super high probability, does have a positive expected outcome, but we really need IWM to come back down to at least 196 before this trade actually starts to work in our favor. So not too much of a fan of that. So instead, what I can do is I can now start to expand the universe out. So let's go ahead and grab some other ETFs here. So we can just toggle ETFs. We'll remove that filter here, and instead what we can do is we can grab some other symbols like DIA, and we'll grab XSP as well, and we'll actually toggle off IWM. Okay, so now I'm looking at something else, and I can still express the same idea here with DIA and XSP on the broad market. Both of those tickers have really big up moves right now, so you can see on this chart. Both of these tickers, like DIA, has had a huge move as well. So same general thing is going to happen here. But it at least, like Trade ID, has got me out of making a bad potential trade in IWM. So now what I can do is do the same time period. So this is a 30-day or 36-day contracts. Those are the same January 19th contracts here. And now I can start to filter this by alpha. I can even sort this a little bit more by probability of profit. Maybe there's some ones in here with a 60% probability of profit. And now you can start to see that these trades actually look like potentially a lot better trades than IWM. And I'm just trying to give some exposure to the market the way that I want, which is bullish. But this looks like a much better trade in DIA, which is very high beta to IWM, right? And here we have a break-even point that's above where the stock is trading. So that's great. We have a high probability of success here. So probability of profit here is 61%. And more so than the IWM positions right now, it looks like the expected value and the pricing of options is much better in DIA. So in this case, this actually looks like, comparatively a better trade to express a bullish exposure on the market right now. Now, you're not doing it directly in IWM, which is fine, but Trade Ideas helped me figure out that IWM doesn't have good pricing right now. Maybe DIA has better pricing and better math. That is a better trade to potentially get into than the IWM trade. So again, do your own trading. I'm not telling you to do this. This is not a suggestion or recommendation to make this trade. I'm just showing you how I kind of look at trading now, which is different than just randomly picking and choosing, which option contracts we want to trade, and instead using Trade Ideas to shop for the best possible trade that fits your portfolio. And so right now, this might be a good trade that you want to get into. And again, you can go through here and just rank and sort different trades that kind of fit your criteria here. We can even filter this down more and say, okay, expected values more than $10, and let's do alphas more than 10%. So we're starting to really filter the list down to the ones that are just the perfect trades that we would want to make for our portfolio. So it's a much different way of trading, and that's why I want to show it to you, because I thought today was really, the differences were really apparent between just picking and choosing random strikes that hopefully work out, and actually going in and using math and probabilities, this new options trading 2.0 way, and trying to find the best trade that works for your portfolio by letting computers and systems basically analyze and pull up data on hundreds of thousands of different positions for you, and then you go through and filter and pick the one that works best for your portfolio. So I hope this really helped out. If it did, let me know in the comments. As always, until next time, happy trading.